Good afternoon, everyone. Jalen Pedig here with Farmward Cooperative. As we close in on harvest here in southwest Minnesota, I just wanted to put out some update videos from time to time here on the grain markets. My goal is to keep them relatively short and easy enough for you to watch from the field or before you get your day started here. I know as everyone gets really busy in the fall, it's easy to get disconnected from the markets and the news affecting them. So the point here is going to be to touch on one or two relevant fundamental pieces and then follow it up with a quick update on the charts and some technical support and resistance levels. Like most marketing updates, I do have to put this disclaimer out there. Please read it. Know that the opinions in this video are only mine and that there is a risk of loss in trading futures and options. So if we look at the markets here, a quick snapshot of where D's corn, Nova beans closed for the week. Pretty lackluster week all around, especially on the bean side. You know, we did have our USDA report on Tuesday. When you look at the two reports, definitely I would say a little bearish corn for sure, and leaning neutral to bullish beans. And beans are the one that struggled here towards the end of the week, especially today. You see on the daily change there, November beans down over 20 cents, down 22 or more on the week. Corn, you know, a nickel or so today, 7.5 on the week. So all in all, you're seeing a little bit of harvest pressure. Weather looks decent for harvest over the next couple weeks here, and the export market relatively slow here this week with limited sales to China. You know, you look at the bean market and we are overpriced compared to Brazil and Argentina, so something to watch, trade action as we get into next week. So the main fundamental topic I'm going to cover today is a quick review of the yield portion of the USDA report we had this past Tuesday. I think there's sometimes a lot of confusion on how USDA comes up with their numbers, you know, especially if you don't agree with them. But I do encourage everyone after these fall reports to look through the executive summary. So if you haven't seen that before, it's essentially a supplemental document that USDA puts out that includes data that backs up their numbers or supports their numbers. Now, remember, where do these numbers come from? So we have the combination of an operator reported survey, which is essentially a producer yield survey. That's done in the first week of September. Field surveys, which are done the last week of August, and then satellite imagery as of August 28th. And so when you look at the September report specifically, the data that USDA is going to use in their field surveys is ears per acre. And when you look at this number here in 2023 compared to the past 6 years, we have record ears per acre. Now, future reports will take into account ear weights and ear lengths, which will be very interesting to see this year. Obviously, with the super dry start to the season in most areas, the hot and dry finish to the season, maybe finishing things along a little too quickly. And you know, the potential for tip back and things and ear lengths in dry states such as Iowa. So that'll yet to be that's yet to be seen in future reports. But just remember, when you sit here and look at, you know, how do we come up with 173.8? How is it possible that we're half a bushel more than last year's final? This is, you know, one of the key data points that USDA is looking at to back up those numbers here going forward. We'll see about the other pieces of data, weight and length, as we get into future reports, but just know that, you know, we have a little bit to overcome if we do see these high ear counts across these 10 main states going forward here into the fall. The next piece you'll see in that executive summary is just a simple state map that shows, you know, our bushels in September here and the percent change from the previous year. I think there's a couple main things to point out. Iowa right here, no change from last year, no change from last month's report either. So that leaves you at a 200 bushel statewide yield. I think that's going to be the key one to watch as we get our harvest reports out here over the next couple weeks. Is Iowa better or worse than last year or the same? You know, a tough finish, a dry year for a lot of Iowa. Can they grow a 200 bushel statewide average? You know, we'll see. We'll see here going forward. But it's worth noting that Illinois down 7.5% from last year. Still really good, 198 statewide average. You couple that with your other two Main Eastern Corn Belt states here, a record in Ohio, near record in Indiana. But Illinois down 7.5%. Worth noting, Nebraska is up 7.3% off their disaster year last year, so almost offsetting Illinois' drop. And then you can see all the other blue states here, significantly better in the South than last year, better in the Dakotas. That helps make up for some of Minnesota's losses, Missouri's losses there as well. Overall gets you to that 173.8 that I mentioned before. And where that puts you ending stocks, 2.2 billion bushels, 15.4% stocks to use. That's a sizable amount of corn. We haven't seen those types of carryouts since at least 2017. We remember where prices were at that time. So where it sits in the corn market, you are going to need a continued yield cut in these future reports to really make a dent in this balance sheet here going forward. So moving on to beans, soybean stocks, still very slim. They came out with 50.1 bushels per acre, down from 50.9, right in where the trade was expecting. That puts you at 220 million bushel carryout. That's after taking 35 million bushels off of exports and 10 off of crush. So U.S. soybean stocks, at face value, still very slim. World stocks, a little bit different story with Brazil coming off their big crop, but we'll save that for another day. When you look at the executive summary on beans here, pod counts is what USDA is using right now. Pod weights, bean size, obviously a different story and yet to be seen here in future reports. We'll see where that ends up in certain states, especially the ones that finished quickly and were maybe a little drier early on. But when you look at pod counts, it is worth noting we're significantly higher than last year. Last year we ended up 49.5 final bean yield, and you look at your main 11 states, your pod counts alone were right in line with these two big years here, and quite a bit better than September of last year. So that's worth noting when you question USDA's bean yield, how they come up with those numbers, and you can see, their pod counts at least at this point support that. And then again, on your state maps here, where are we versus last year? Your U.S. bean yield as a whole right now, 0.6 bushels an acre better than last year. And you can see, these states over here, significantly better than last year. We're down a little bit through this central part of the belt, and record bean yields projected over here in the eastern corn belt. So then I just wanted to point out as well, where do we usually go from here on yield? Do we change a lot from September to final? Is it worth stressing about the October report, the November report, the January report, or, is it a lost cause at this point, hoping for a big drop in yield to significantly change your balance sheet? On the corn side, there's a lot of years going back from 2011 on that you're within about a bushel of final. There's plenty of years there where there was very minimal changes from the September report to final. But you do have a couple outliers in there. You saw 2020, from September to final, we dropped over 7 bushels an acre. You saw almost 5 bushels an acre back in 2018. On the flip side, in 2017, you almost gained 7 bushels an acre. So, when you look at a 5 bushel an acre change on corn at 87 million acres harvested, that's 435 million bushels. So if you take 5 bushels off, that final yield, cut your balance sheet by 435, that's significant. There's no doubt about it. That's a significant change to your ending stocks. But I do want to point out, remember though, exports currently are projected 385 million bushels more than last year. And at this point, we've seen virtually nothing from China. Now, we got a whole year ahead of us. There's a lot of things that can happen on the demand side, on the export side. But as it sits today, we are quite a bit behind last year's pace on exports. And if that continues a month down the road, 2 months down the road, you might change yield, but you might change that export number as well going forward. And on the bean side, usually beans, you're within a bushel of final. You got this deviation here in 2018. USDA used to be a lot worse at guessing bean yield back here, but from about 2014 on, you're generally about a bushel from final on bean yield. Harvested acres at about 82.8 million acres. You know, a bushel is significant. 82 million bushels, one way or the other on your balance sheet changes things. So bean yields, we'll have to watch harvest reports over the next couple weeks to get a feel where that's going to shake out. Some dates to watch going forward. You know, I put weekly export sales report here, 6 days from now, next Thursday. Really, your daily flashes are almost more important than your weekly export sales, but worth noting that comes out every Thursday morning. Grain stocks report, sometimes forgotten about, especially if you're busy out in the field with bean harvest, September 29th, 11 o'clock. That's your quarterly grain stocks report, and it historically does add some volatility. It's one of the more volatile reports of the fall, so keep that in mind. Also, that's on a Friday. Starting the next Monday, we start our crop insurance pricing for your fall price. That's established during the month of October, and then October 12th, you do have your next USDA crop production WASDE reports. And October is a huge month for soybean planting in Brazil as well, so keep that in mind. Let's finish off with some technicals. We'll go through both the corn contracts, 23-24, and then 23 and 24 beans, and I'll let you go for the week. So the 20-day moving average on D's 23 corn is this yellow line and has obviously been a tough spot for the market going all the way back to the end of this July rally when we gapped lower here right around 5.25. That's a number to keep in mind as well. But this 20-day moving average has been a problem. We've traded right around it every day, but we've never really gotten enough life. Now, if you can break that, you do have a 50-day moving average, which sits conveniently right at or right above $5 futures, with this 100-day and the gap up in this range as well. I think it's going to be key if you watch from a technical standpoint. You watch this downtrend line that we've bounced off right here and right here. That sits about 469 at the close of the day here, so that's going to be a key area to the downside to bounce off or to hold. Really, it's been a lackluster market here lately. Really, you need to, one way or the other, to get some movement, go down and break this trend line lower, or get a couple closes above this 20-day and push up towards the $5 mark, and hopefully higher than that at that point. Keep in mind that gap around 5.25. That's a significant rally at this point. That's almost 50 cents away. That would feel like a big move in D's 23 corn, but if you're putting some orders quite a bit ways from the market, that's one thing to keep in mind here going forward. D's 24 corn, we've been hovering again right around this 20-day moving average. I think it's worth pointing out that 514 is where these two 50 and 100-day moving averages converge right now. Anytime you get two significant moving averages together on the charts, it creates a significant obstacle, right? So that's something that the market, if you get a little bit move higher, a little bit friendlier day next week or in the coming weeks, that's an area to watch that you'd need to break and close above to really get some momentum going on corn. That sits at 514. There is a gap again in that 5.25 area on D's 24 corn, and I think this trend line again is an important point to hold for support right around the $5 area. If you like looking at stochastics, just worth noting that D's 24 corn is about neutral. I didn't point it out. D's 23 is actually down, nearing the oversold levels on the stochastics right now. Nov 23 beans. So if you're looking at beans, unsold beans in the field coming out of the field this year, pretty negative day here, almost the key reversal lower here in beans today. This is going to be an area to watch next week. This 1330.5 200-day moving average, we bounced off of it here, we bounced off of it here. We're only 10 cents away from it on the close here today. Can you find some support at that level again or not? You can see we bounced up against the 20-day moving average as our high today. 1366 3/4 is where that sits on the close, and that is exactly where this trend line that we broke post report on Tuesday, we broke lower than that support point. So from a technical perspective, that now becomes a resistance point higher. So that's an area to watch. After that, this downtrend line sits at about 13.92, and then I just highlighted the $14 level on Nov 23. You don't see it as much here recently, but if you'd go back a year and a half, that $14 area has caused a lot of problems for the November soybean market in the past. November 24 beans, we held some nice support here today, you know, at the 50-day moving average. That was the low of the day. That sits at about 12.80 and a half today. The 20-day up here at 12.98 and just below that magic $13 mark on Nov 23 beans. It's worth noting that your most recent highs 13.20 here on August 28th, 13.19, so you almost had a little bit of a double top here back on July 24th here. 1351 is the annual high going back to early last November, so almost you know, almost 10 months ago now, almost 11 months ago now. You know, we're gonna really need to see if we can hold that 50-day. Otherwise, this 200-day is the next key one to watch here on Nov 24 beans. Again, from a stochastics perspective, I would call it pretty neutral. Nearing oversold, but definitely not there yet. You know, nothing signaling hard one way or the other from a technical perspective there. But those are some areas to watch on the technical. So if you have any questions on anything I went over here today or anything grain marketing related in general, I encourage you to reach out to myself or Joe Hennon in Danube or Jennifer Hins in Wood Lake, and we'd be happy to help you. Thanks for listening.